Hello, I'm Mark Abssy, Head of Indexing at Tematica Research, and welcome to the week ahead. As we usually do, we'll take a quick look at what happened last week, and then, of course, what's on our plate for these next few days. So the big takeaway from last week, of course, was the inflation picture. And as we talked about before, the numbers weren't egregious, but they were enough to have the Fed come out and say that there's no immediate reason for them to make any changes in their current policy. So rates are where they are. They're going to stay there definitely through the next couple of quarters and potentially even through the end of the year. So we are back to elevated rates. On the political side, of course, there's lots of buzz about how the current administration doesn't like that. They want to see lower rates to spur growth and all these kinds of things, but there's kind of an economic reality around where rates are, and quite frankly, the job that Powell and his team have done so far to kind of guide us through the last couple of years, certainly post-COVID. That aside, kind of things are what they are, and the markets reacted, like I said. One of the other things that happened last week is it turns out that there are reports of excess oil inventories here in the States. And that, coupled with the higher rate environment and anticipated lower demand out of China, is starting to put pressure on oil prices, which has kind of good and bad aspects to it. The good, of course, is that energy costs are a kind of a key driver of inflation here and globally. But, of course, if you're an energy investor, those lower prices translate into lower profits. So it's one of those scenarios where you can have your cake or you can eat it, but you can't do both, at least in the energy space. So that kind of set the stage not only for this week, but really, like I said, for the next few months, if not kind of the balance of the year. Now, looking ahead to this week, there really isn't any great economic data that is coming out. We are going to get our usual Thursday employment update. We're getting flash numbers on PMI, manufacturing and services, later in the week as well. Those numbers did have a bit of a pleasant surprise in that the manufacturing number that came out last, the last update, kind of finally broke into north of 50, which was unexpected but pleasantly received. And of course, with PMI numbers, anything below 50 indicates a contraction. Anything north of 50 indicates expansion. And of course, on the manufacturing side, these numbers have been below 50 for some time. So it's good to see them kind of break into expansion mode. Again, looking at this week, light week on the economic data side, but we do still have earnings. We're still running through earnings, and looking at the companies that are reporting, ones that kind of come to mind or that are in the fore, going along with the rate scenario of the last week and where we are. We're going to hear from Toll Brothers, and of course that'll be interesting not only to see what the current environment has done for their existing sales, but what they see going forward. Okay. Also, energy related, but not for oil, of course. These are miners. Vale, Newmont, and Cameco are going to be reporting this week. And of course, the big story so far this year has been gold. An ongoing story, though, has been uranium. And all of these companies that I mentioned do have some exposure to uranium, Cameco more so than the others. But it'll be interesting to see, again, what they've seen in last quarter, last year, and of course their forecast in going forward. Gold being where it is, and I think gold closed out, I want to say like close. It's really moving towards 3,000. The last price I have here for Friday is $29.28 per ounce. Again, still kind of record highs. A lot of that has to do with kind of global, I guess, antsiness. I don't know. Institutions, large institutions, and certainly sovereigns are really pointing to and returning to gold as the hedge that it historically and traditionally has been. So the expectation is that as long as the levels of uncertainty persist in global markets, there's no reason why we should expect that gold prices would go too much lower than where they are now. Also going to get a fair amount of updates on the consumer. We'll see Shake Shack and Cheesecake Factory, Wingstop, right? So that'll get into a little bit of literally the appetite of Americans and where they're spending their dollars. Also reporting is Toast, not a food related company, although they are a transaction processor. So it'll be interesting to see what their numbers are like, number of transactions, average tickets, those kinds of things. We're also going to hear from Walmart, which of course is kind of a staple of taking the pulse of the American consumer. And then we're also going to hear from Mercado Libre, we're going to hear from Alibaba, and we're going to hear from Wayfair. So, there's a pretty good picture that's going to emerge about the consumer. And as usual, yes, we're interested in what happened in the last quarter, but especially given last week's announcements, we're very interested to hear what these companies see going forward. Two last names on the consumer side. Carvana will also be reporting, and of course they are a big used car reseller, so it'll be interesting to see what trends they have been seeing and of course what they see going forward. And then Rivian will report as well. And just as a side note, that's a company that is interesting to me just because they've always seemed to have really good build quality and just a kind of a solid product. For whatever reason, it never really caught on. I think those people that have been enjoying them, I don't know. They did get the contract to do the Amazon fleet. I believe that there's another company that they're doing a fleet for as well. So, even though on the auto side they're not kind of shooting the lights out, on the fleet side and on the truck side, they're getting some good experience there. So I'm interested again to hear what their rearward view is, and then also what they see going forward. So, that's kind of it in a nutshell. It's a shortened week today, just the 4 days. It's a shortened week. We've just got the 4 days. Again, nothing too heavy on the economic data side. We're going to get some regular updates. And the earnings that I mentioned there, we'll get updates on that. And that's about it. So, hope you had a great break, and let's get back to it. We'll see you soon.